problem 5B. So if you would get your handout that I gave you in class or print it off of the web so you can kind of see what the handout looks like. It's the one we went over from class. You go to like page 5, you can see 5B. I would also encourage you to get something like this set in front of you, because on every one of these adjusting entries we're going to walk through is the item a revenue or expense. If it's a revenue, you're going to credit the revenue. If it's an expense, you're going to debit. Then you're going to ask yourself, is this revenue that I've earned, I haven't yet received it? If so, the other side's going to be a receivable. So if I have to credit a revenue, the debit will be a receivable. If the revenue the cash had already been received, my debit's a payable. An expense, if I always have to debit an expense, and so the other side will either be a payable if I haven't yet paid it, or if I've already paid it, it will be using up the prepaid. So get that in front of you. I will not have it on the screen, so you can write it. You are just fine. So I'm going to pause it. Okay, so problem 5B, we have Reese Financial Services, which specializes in appliance repair services. That makes no sense that they're called Reese Financial Services and they specialize in appliance repair, but anyway, is owned and operated by Joni Reese. Reese Financial Service accounting clerk prepared the following unadjusted trial balance at July 31st. So it makes me think they forgot to change the account name or the title of the company. But anyway, these balances are important because these are unadjusted as July 31st, so we haven't yet changed these numbers to follow the matching principle. So what I want is an adjusted trial balance, things that have been fixed. So I can go down here and I might adjust prepaid insurance, supplies. I have maybe some for building, unearned, etc. So those are my possibilities. So we're going to go through these. Depreciation on the building for the year is $6,400. So I'm going to ask myself, is it a revenue or an expense? And we talked about depreciation in class the other day. Depreciation is how we record using up a fixed asset. So depreciation is an expense, so I'm going to debit expenses. So my debit is depreciation expense, and it tells me how much it's for. So I put that in my debit column. And whenever you have depreciation expense, your credit is always accumulated depreciation. Please know, and I want to remind you, that accumulated depreciation is a contra asset. So if you look up here, here's my building, and here's my accumulated depreciation on the building. So I will never look at a building account without its related accumulated depreciation. So this is my asset, this is my contra asset. So every fixed asset, with the exception of land, has two accounts, one for the asset, one to keep track of how much is used up. I will net these two, and that is called book value. Don't forget that. That's an important term. The book value of this building is $155,750 minus $62,850. Book value means that's what it's on my books for. Okay, the next one is depreciation of equipment for the year is $2,800. Again, you usually have to compute that. It would say your equipment is going to last 10 years. And so if it was going to last 10 years and this is one piece of equipment, I would take $45,000 cost divided by 10 years and get $4,500. But buried in this in this account called equipment could be dozens of different items, so they tell us how much it is. So again, I have the similar journal entry. It's an expense, so I debit depreciation expense, dash equipment, mainly just because that's the account, and accumulated depreciation on the equipment. Feel free to abbreviate that. Accrued salaries and wages at July 31st are $900. Remember that accrued means accumulated, so the revenue or expense has accumulated but not yet been paid. So salaries and wages are a cost of doing business, so I debit my expense, and I haven't yet paid it, and so my credit is a payable. So I'm going to debit an expense, and a payable is a liability. Liabilities are increased with credit. So if you're still having trouble with assets or debits, liabilities, owner's equity are increased with credits, revenues are increased with credits, expenses are increased with debits. and dividends are increased with debits. Next one, unexpired insurance at July 31st is $1,500. So this means the amount that's still unexpired. So I want to expense the portion that's used up. So I need to back into how much is used up. So if I go up here, I see I have prepaid $6,000, and it tells me the unexpired portion is $1,500. So the portion that's used up must be that difference. So is that $4,500? So insurance is a cost of doing business. It's a revenue or expense. So it's a cost of doing business. So it's an expense. So I debit insurance expense. And since it's used up, I need to take it out of prepaid insurance. So I credit prepaid insurance. So there's my computation. Generally speaking, you don't have to write these explanations. Little computations underneath here in the explanation are great, especially if you want me to follow your error through if you misadd or something. Fees earned but unbilled. So fees are, ask yourself, is this a revenue or expense? It's earned and it's fees, so it's a revenue. So I'm going to credit my revenue, fees earned, but unbilled means if I haven't even sent them the bill, I haven't got the cash yet. So it's yet to be receivable. So I have fees earned as my credit, and my debit will be a receivable. So match that with that chart and see how it works. Next one, supplies on hand for July 31st is $615. So now I need to go up here, and again, this tells me what's on hand. I always expense the portion that's used up. So I need to figure out how much is used up if I have $615 on hand. So I go up here to supplies. I see $17.25. I've still got $615 left, so I back into the portion that's used up. So kind of got ahead of myself here, but first of all, ask yourself, is supplies a revenue or expense to a business? It's an expense, so I'm going to debit supplies expense, and I need to take it out of supplies because they're gone, so my credit is supplies. So I debit supplies expense, credit supplies for the portion that's used up, which is $17.50 minus $615. And rent unearned at July 31st is $300. So the opposite of unearned is earned. So I want to record as revenue the portion that's earned. So make sure you read it carefully to figure out, do they give me what's earned or do they give me what's left and unearned? All right, they give me what's left and unearned. So I have unearned rent of $3,600. It says I still haven't earned $300. So that difference is the portion that's earned, the $3,300. So I ask myself, if it's unearned, it becomes earned, so it must be a revenue. Revenues are credits, so I'm going to credit rent revenue, and I need to take it out of unearned rent for the $3,300, so I would debit unearned rent to get this balance down. Okay, the next part is, determine the balance in the account. I'm only going to do a couple of these, but notice the, let's take depreciation expense. Notice I debited it, $6,400. Honestly, you would post them to the T accounts and add up the T accounts. One way that I do this more quickly is I just add it on this line. So you can have depreciation expense for building $6,400. I don't have a line for depreciation expense. This is not depreciation expense. That's my contra asset. So I could just add depreciation expense. It's going to be $6,400. I'll put it over here, $6,400. Then I have credit to accumulated depreciation building, $6,400. So right over here, I have a credit of $62,850. I credited here, so I'm just going to write maybe plus $6,400 there, plus $2,800 here. Wages and salaries expense. Notice this is a debit. That's a debit, so I'm just going to put plus $900 there. Salaries and wages payable. I don't have an account, so I'm going to squeeze it right in there. Salaries and wages payable, etc. So basically, I'm just going to add or subtract these, or if you really wanted to take the time, you could make T accounts and put all these on the debit side, credit side, debit side, credit side, etc. and then add these. Add this to the debit side for building a depreciation expense. Add this to the credit side. Okay, so what ends up is these balances. So notice, let's pick a couple of them that I didn't have. Depreciation expense building, since it wasn't over here, but now it appears. And now I double check my debits equal my credits. And that's about it. So that's that's 5A.